Eric Muathe, Muathe.com, with part 1 of this weekend's market analysis video for July 8th and July 9th, 2017. I'm recording this with about 4 hours to close before Friday's session, today being July 7th. So here we can see the market close to the highs of the day. Let's take a look at those charts. I'll show you why I think around here the short-term charts are showing some levels of resistance short-term. But let's take a look at the charts here so we can have a good picture as to what the market might be trying to tell us. Let's begin with the Nasdaq Weekly, and the Nasdaq Weekly has a simple line that we can use to determine what the market is trying to do. It's a line connecting RSI lows. This is a 2-year weekly chart, and we can see this week the market is doing its best to hold this line. As long as this line is holding, we can assume that the market continues to be stable and potential for a bounce remains. At the same time, if this line breaks, then we can look for lower prices. Right now, without adding any type of color, let's take what the market is giving us, and the market is saying that it is doing its best to hold this line right now. So as long as that line is holding, indication here is that on a week-to-week basis, the market looks to bounce. Now, if we take a look at the 3-year weekly for the Nasdaq, so 3 years of weekly data, this is the line we've been using for guidance. This line was resistance until the market broke above it here at the beginning of 2017. Since then, the market has been using it for support. It held here, the slight support there, which is these lows and a nice entry. It held here for these weekly lows and a nice bounce back to new highs, and now we are back to test this line. So obviously bulls would like to see the market bouncing back above the line and eventually attacking fresh highs. At the same time, bears would like to break this line so we can begin a strong move to the downside. So right now the market is doing its best to hold. Again, one more time, that line goes back to the highs of 2014, and this is where the market is doing its best to hold. Right now, again, on this weekly chart, based on this line, we are holding, so potential for reversal higher is now in play as long as this line is holding. And generally what that means is the market more than likely is going to have an attempt to break out or even test recent highs. If we take a look at the Nasdaq Tailing, we see the same type of support, RSI lows. Without any type of adjustment, we've hit this line twice over the last couple of days, and right now we are bouncing back above that line. As long as the market is bouncing on this line, we have to assume that net, this remains a market that is sideways to bullish. Keep in mind, if we move above RSI 50, expect a substantially, or let's call it a relatively big up day. So as long as we are holding on this line, the RSI lows line, this is indication here that more than likely the market looks to bounce. At the same time, as we've seen in the other lines, a break of this line would be a sell signal in the short term, and we can have to wait to see where the market would find support. But right now it is holding, so we have to go with what is working. It is holding, so the market continues to be sideways to bullish as far as the Nasdaq daily and weekly charts are concerned. Now, if we take a look at the hourly, remember I said that there were some signs that the market could be stalling around the highs for the day. And we can see we continue to trade close to the highs of the day. But I'll show you some short-term charts that are showing around here. We can see potential for the market stalling into the close of the week, close of the Friday session. Here we can see the Nasdaq. It is coming back at the highs of the day to test the RSI topside resistance. It needs to clear this line if it is to see short-term continuation to the upside. We can see that at the lows of the week we held RSI support, so we can also conclude that we are stuck in this wedge, and ultimately we look to get out of the wedge either with a breakout, which would be bullish, or a breakdown, which would be bearish. If we take a look at the Nasdaq 30-minute chart, we can see the recent break of the RSI, and that break coincides with this movement lower or those highs. We take that information, draw our uniformity resistance line. Anytime we come back to this line and we are rejected with uniform action, it's a short-term sell signal. We can see resistance here of that high, resistance here of this high, and short-term, that's why I'm saying day on an hour-to-hour basis, it looks like we are coming back to test that line. Failure to hold above that line might be suggesting that we are looking at markets trading at highs for the day right now. Now keep in mind, we had 1 month down in the month of June, which means that now the Nasdaq has an opportunity, if it wants to break out after 1 month of rest, which means that any breakout above the current all-time monthly closing high would be very bullish. So a breakout above 6198.52 would be a fresh monthly breakout for the Nasdaq, which would be very powerful. If it happens, keep in mind, we continue looking at the RSI holding above 69.1. So a breakout and the RSI holding above 69.1 is exactly what the bulls want to see. Now this would be similar to what happened here. In mid-2013, we had 1 month down and a subsequent monthly breakout, while the RSI was already trading above 69.1. That was a powerful breakout. In fact, we have multiple breakouts during this time period. Another breakout here, another breakout, another breakout. All this after more than 1 month of rest. All to say that the market did trend higher after the RSI stayed above 69.1 throughout this period here for about 2 years. So a breakout here is what the bulls want to see. Again, the number to watch is 6198.52. A breakout above that number by the Nasdaq is a very strong indication of intent to record higher price levels. At the same time, failure to break out and failure to hold above this RSI level might be good enough to signal that the market is due for a pullback, or maybe even that the market has seen major highs. I would conclude that short term, let's watch this level. A breakout will be very bullish, and as long as the Nasdaq is holding its monthly RSI above 69.1, this market continues to be sideways to bullish. Let's take a look at the Dow, and here I just want to discuss the fact that the Dow continues to hold its weekly RSI above 69.1. As long as the weekly is above 69.1, this is a sideways to bullish market. We can see that on the daily, the Dow is showing recent double bottom support above RSI 50. As long as that's the case, as long as the market is holding above RSI 50, the indication here is that we might have to test the recent highs, if not break through them. But that would need the RSI to hold above RSI 50. There's also another way of looking at this. It is this recent breakout on the RSI. Once we broke out above that line, we had this movement higher. The market hasn't looked back since. So this entry, this breakout here, corresponds with this RSI movement. We take that information and draw our uniformity support line. Check the description of the video for a link describing this method, and we draw a straight line. So you take that level, and anytime you bounce on this line with uniform action, which is exactly what the Dow is doing, you got double bottom support. That means that it's time to get back into the name. So as long as this line is holding, the blue line, as long as the Dow is holding RSI 50 on the daily, chances are this market continues to be sideways to outright bullish. Now, if you take a look at the Dow Monthly, of course, we know that Dow Monthly, ever since this most recent breakout, in, let's call it that, breakout was in April here. This breakout was good. We can see that the market has continued to have positive monthly closes, and more importantly, the Dow continues to hold its monthly RSI above 69.1. Again, sideways at worst, bullish at best, which is exactly what we got over the last couple of months here. So we continue holding above 69.1. That's still a good to stable market. If we take a look at the S&P 500, we can see that short term it is doing its best to hold this line. So as long as this RSI lows line is holding, going back to last October, then this is still good enough support. Keep in mind we had come back to test this breakout, the previous weekly closing high breakout right there, and that level was at 2399.29. Going back to this weekly closing high, we broke out above that, spent some couple of weeks to the upside, tried to break below it, but we held. So the support continues to hold. In other words, we broke out. We've come to test this over the last 2 weeks. As of right now, we are holding. So as long as the market is holding above this price, we continue looking at the S&P 500 being sideways to also bullish. And of course, bears would like to push the market lower and break below this level. A break of this level would be the beginning of a move lower, and also a break of this line also would suggest that the market is due to test recent lows, maybe the lows here or here. Take a look at the S&P 500. Right now it is coming back to test the RSI top side on its hourly chart right there. Keep in mind this is the market trading with about, let's say, 3 hours and 45 minutes before the close of Friday's session. At the highs of the day, S&P 500 is coming back to test the RSI top side. So failure to move above this level might still suggest that around here you can expect some type of short-term resistance. If the market is to see higher prices, then definitely we would have to clear that line there. Also on the S&P 500 30-minute chart, we can see that this is top side resistance being tested at the highs of the day. Market is coming back to test this line. Of course, bulls want to see the market clear that resistance. Bears would like to see short-term resistance on the line, which would indicate that around here we stall short-term and we come off the day highs into the close of the week. If we take a look at the S&P 500 5-minute chart, this is the intraday highs right there, and we can see that is after the break, that RSI break here brought the market off the highs of those levels. We haven't been back since, and so we take that information and draw our resistance line. Should be something like that, and you can see that every time we've come to this level and we've been stalled, the market has made a short-term high, tried to move above that level here, we were rejected, and now we are coming to test this level here at the highs of Friday's session. So if we are unable to move above this line based on the 30-minute, based on the hourly, and based on this 5-minute chart, chances are we are looking at markets right now trading at the highs for the day into the close of the week and the close of Friday's session. To conclude, take a look at the S&P 500. As long as the S&P 500 remains above 69.1, which is the story for 2017, the market should continue being favoring the upside. We're going to see sideways, shallow pullbacks, and potential move to the upside as long as the S&P 500 continues to hold its monthly RSI above 69.1. And as I always show this example, S&P 500 jumped above 69.1 here in 2013. For the most part, it defended that level until here, which is almost 2 years later. And throughout that period, we had shallow pullbacks, but ultimately the market had a nice trend to the upside. So as long as S&P 500 is above 69.1, you've heard me say this almost a million times, but that's the truth. As long as we are trading above 69.1 on the monthly, markets continue to be sideways to outright bullish. That concludes the free part of this video. Otherwise, subscribers, be on the lookout for part 2 of this weekend's market analysis video, where we go in and take a look at some ideas, take a look at sectors, commodities, and see whether we can find some ideas for the new week and maybe revisit some of the ideas we shared over the last couple of weeks. Eric Muathe with Muathe.com. Enjoy the rest of your weekend. Peace and blessings. EACS. Mwah.